Hello and welcome to Crypto Weeklies. Today we are going to discuss about Near protocol, also the general market recovery, accumulation, machine learning based price forecast and regression analysis. None of the content is financial advice. All of the content that we are discussing today is available on cryptoweeklies.com. This is the home page. The link is on the bottom of your screen. So starting with the crypto TLDR news, the sentiment over the last 24 hours is at around 88. That means a lot of bullish narratives in the market right now. uh, there are some bearish narratives. You can go over each of the narrative or news over the last 24 hours. General idea: the green ones are the bullish, red ones tend to have a bearish bias, and the yellow is neutral territory. So going to the second thing that we are going to discuss is the narrative word cloud. In the last over the last 7 days, particularly over the last 24 and 48 hours, lot of discussion related to the bullish sentiment of the market. The bearish narratives have disappeared off this narrative wall. This is all of the discussion related to crypto and on YouTube. So the other altcoins that being discussed, such as Solana over here, even Ethereum is having a lot of attention. Bitcoin definitely the biggest narrative. Again, some of the other news related to the regulatory body, as well as some of the presidential candidates is taking a lot of attention right now. But apart from those narratives, definitely lot of bullish narratives, such as so over here, bull run, as well as price action being favorable over here, and breakout related uh, discussion. Also new narratives, such as which is October, which is a fancy way of saying uh, October being a rallying or good month for crypto. So this is again one new narrative emerging. In terms of the last but not the least is the PeakValley Indicator. This is a composite indicator of the overall riskiness in the market, normalized between 0 and 1. 0 low risk, least possible risk, and 1 highest possible risk. Right now the risk is at around 0.21. This gets updated every single day. Right now, over the course of this month, at least over the course of last 3 weeks or 20 days, since September 6, when the risk was at around 0.14, again green territory, you can see, which starts between 0.1 risk and 0.2 risk. So that's where we spent most of the September. But now, as we are exiting September, the risks have taken this yellow color, which is a moderate risk between 0.2 and 0.4. That's when, again, the key idea with this is when the color is green or blue, that's when DCing in the market makes more sense. This takes into consideration top 100 cryptos by market cap, and again DCing out of the market when the risk colors are either orange or red based on your risk tolerance make more sense. Again, the way these are calculated using several price based risk metrics, such as volatility, alpha, beta, risk adjusted return, and percent drawdown for most of the top 100 cryptos by market cap. And you can check out each of the definition of each of the indicator that is used to, again, normalize that between 0 and 1, and provide one single snapshot of what is happening in the market. In terms of why we are discussing Near, over the last 7 days has been a healthy gainer. Again, most of the market is up between 10 to 25%. Near is up by about 21%. Again, the price action at around $5.53. Market cap slightly under 6.5 billion. One of the top 20 cryptos by market cap, and also almost top in top 25 by, again, volume. So in terms of its tokenomics, the circulating supply is at around 1.1 billion, total supply 1.2 billion. Doesn't have a max supply, but again you get the idea that the total supply is close to the circulating supply. That means, at least in terms of the total supply growth, there isn't much risk of any token inflation eating out the gains for this particular crypto, which is always a good sign. Now that we have covered this aspect of tokenomics, as well as the market cap based positioning of Near and recent rally, we can discuss about the forecast graph, which is essentially the machine learning based price analysis and prediction for Near. there are three scenarios forecasted by the model. The pink is the base case, the green is if the market were to crash, how low it can go, and if the market were, that is the bear case, and yellow is the bull case at 70% standard deviation, 70% confidence level approximately, and that is one standard deviation, bull case and bear case. You can see that the particular crypto has had a decent that is near has had decent recovery from $1 in October 2023 to almost $8, that is again towards the end of May of 2024. Right now it's trying to break this descending triangle or descending wedge pattern again of lower highs and lower lows. If the price goes significantly beyond $6.20, these are the weekly averages, then again we'd see a different market structure than the one that we are seeing since May of 2024. With all of this data fed to the machine learning model, the model itself, the machine learning model is bullish on near right now. You can see even the base case, the model forecasts that the change of the lower high lower low structure to from that to again a V-shaped recovery based structure between now and October, end of October 2024, where the price is forecasted between right now till end of October between $5.6 to about $7.5. And if you extend this forecast till about middle of February 2025, the base case at around $8.31. This is a neutral scenario in the market where there aren't much bullish or bearish side. This is again discussion. If on the other hand market exhibits some bullish behavior, the bull case is at around between price action of $6.47 all the way to about $18.70. Again, that would correspond to a week at a weekly level all-time high. The previous all-time high at a weekly basis was $18.60. Again, this analysis believes if the market turns bullish at around one standard deviation level, that is not in the mania phase, but again kind of a bullish recovery that near had towards the end of the year 2023 from October till December. If those kind of moves get repeated, this is what is in store per the model. Again, this is not financial advice. The purpose of this analysis is not to tell what will happen tomorrow, as in if the market will go up or down. That is exclusively dependent on the market forces as well as some of the micro and macro environment related to that asset. Again, crypto is no different from that principle, but the purpose is more towards what if the market were to go up, how high can it go, and if the market were to go down, how low can it go, based on what the machine learning model tells, based on the historical price and statistical framework. So if you are interested in week by week progression of these forecasts, this is available on the bottom of the screen itself. The base case is in the middle. To its left are the 3 standard deviation bear cases. Right now the focus is within the 1 standard deviation, which is the 0.68. If the market exhibits mania, then the 95 or the 2 standard deviation, or panic, then the 2 standard deviation bear case makes more sense. Right now we are ways away from the 2 standard deviation and 3 standard deviation scenarios. Again, but again, as we have seen last year, those kind of jumps can occur pretty quickly, as exhibited by this rally from $1 to about almost $4, again the 4x over the course of 2 months. So again, this is again not totally outside the realm of the possibilities, but again with the bull case scenario itself at 68 percentile, you can see the range is almost a 4x from $6 to about $25, $6.50 to $25. So again, that is where if you were to ask my opinion, not financial advice, this 68 percentile zone is where most of the value right now, or most of the attention is logical to spend. Again, in the mania phases, I just will show what could happen in a theoretical mania case that could exhibit sometime in 2025 between $7.50 to about $50. That's the mania case. Right now, again, we're in just we're just within the 68 percentile scenario. Now that we have covered the machine learning based price forecast, just we'll briefly look at the regression based levels for near. Right now coming up on the key level, the fair value of the polynomial regression function is the line in pink. Yet again similar color codes. To its bottom are the 3 standard deviation bear or 3 standard deviation bottoming undervaluation zones, and to this top are the 3 standard deviation bull cases, or you can say in terms of overvaluation zones. Right now the price is very close to the 1 standard deviation bottom or 1 standard deviation undervaluation territory at around $5.52. If there is if unlike previously when the price could not meaningfully go above this 1 standard deviation bottom light green line, if this time the market allows near to again have its rally back to its mean reversion level, the key level to watch is at around $8.74 for near. That would correspond to a rally back to its fair value. Again, these lines are always a moving target, and they the beauty of this chart is it gets updated every single day, so you don't have to wait for me to make a video, or you can check cryptoweeklies.com, and all the analysis related to near is available over here on the home page itself. We just check the regression based analysis. To summarize it, it's the key level to watch is the $8.70 level. In terms of now the accumulation territory is the SMA, the shortest term model, the DCA, which is 1 market cycle based accumulation strategy model, and over multiple market cycle the TWAP model makes more sense. Right now we'll start with the shortest term model, geared specifically to check if there are any significant undervaluation levels. Right now the last time this happened was again the lows that were formed at that time. The risk level were at 0.29. now it's at 0.42. doesn't tell much about if the market has to go down or such. The last time there was a perfect signal was almost way back in January 2022, when the risk level was at 0.98. The second best time was at around 0.75. You can make a case that the peak risk levels are going down at a shorter term, but again that's a very hard thing to replicate in real life as a strategy. But again, just as an example, back in March of 2024 the risk level was at 0.75, right now at around 0.42. so it gives some perspective if we are totally overheated at this point. In terms of the DCA model, this is again based on a similar regression based analysis. Polynomial regression model looks at whether the crypto is again the risk between 0 and 1, color coded between this plum color, which is the best time to DCA. You can see over here, not too long ago we were in that zone with near, when the price action was between sub $4 and till about $4.50, between 350 and 450. Again, if we pay attention to these plum zones, these are per our model the best time to DCA. Right now it's the second best time to DCA, between risk at 0.1 and 0.2. again not too bad. Again, the prices per this model is still below the regression based fair value, again comparable to the previous analysis. This is again regression based fair value at around $9.04. A rally to that point would again shift the color codes between this low risk level to again somewhere moderate risk between 0.3 and 0.4, if that were to materialize right now. Again, these charts also get updated every single day. You can check out the description as well. The key idea is using the proportional distance between the current price and the regression based fair value to assign these risk levels. Again, identifying both the top and the bottoms. This is helpful for one market cycle at a time. The model that we are going to discuss is the time weighted average price model. The time weighted average price is the blue line, and the key idea with this model is whenever the price is below this blue line, that means the valuation of near is sufficiently low to consider DCAing based on the hypothesis that the time frame is more than one market cycle. The risk level at this point, as the price is above the time weighted average price, is at 0.22. Again, in the larger scheme of things, during the tops, at least what we have seen thus far, the risk goes above 0.66. so we are ways off that level again, but not too long ago. Again, as long as looking as back as again 7 to 8 days week, 7 to 8 days passed, um, uh, when at around September 2024, when the price was at around $4.67. That was the last time that near was at per this model at zero risk. Again, not too long ago, the model highlighted that the risk was zero for near. So to summarize everything again, per the time weighted average price, this is the second or the third best time to DCA. Per the DCA model, again second best time. Per the SA model, not close to peak or bottom. The regression based model looking at one standard deviation bottom, rally back to the fair value at around say $8.75, and the forecast again between now and end of year at base case between the current price and $7.50, the bull case between $6 and about $24, the bear case between $3 and $4.85. So this is all about near at this point in time. Hope you enjoyed the content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.